Happy Friday, guys and gals out there. Why not have some fun? Look, the market's not great. Buyers not recognizing the opportunity. Sellers still not totally getting with it. A little bit of spread there we've got to deal with. Got to make the most. Every situation. There's opportunity out there. A lot of people don't see it. A lot of people refuse to see it. It is what it is. They'll see it in hindsight later. That's okay. That's just how things go. All right. Dow up 700 plus points today. What's going on today was there's an underlying feeling the Fed has a lot of pressure on them to knock it off, basically. And you saw this reflected in the financial markets here. We look at the dollar. We've been following the dollar very carefully because this is the key to everything, right? And you see each one of these red arrows is when they've hiked rates, and look what it's done. Made the dollar super strong, which makes everything else go down. Well, look at today. Look at the big red ugly candle today. And we drew this trend line just to say, you know what, let's keep an eye on this trend line. Because if we are going to see a pivot, if we are going to see relief in financial markets, then we're going to need to hold some kind of downtrend and eventually break this unbelievable uptrend that the dollar's been in. And we got a very big rejection candle today, a bearish engulfing, huge middle finger rejection candle, which means we very likely here in the near future could be breaking this uptrend, which we've been in forever. I mean, forever. This is a daily chart, by the way, a daily chart. And look how long we've been inside this thing. Crazy. We were in one that was even less dramatic for a while, but I mean, this has just been crazy. So you can see the belief worldwide is that the Fed is going to pivot. Basically, that's what this means. That's what the bet is. And, we see a little bit of action today. We'll go to mortgage rates here real quick. This is mortgage bond market, mbshighway.com, Barry Habib's shop. And, we've been in this downtrend that just won't end and just won't quit, right? What happened? That's not how I drew that. What the heck? So anyway, we've been in this downtrend and we haven't got much relief. Really ugly close yesterday was our lowest close. Rallied today, rallied back up. Now we're into that wick down that we had a few days ago. I believe that was either Monday or Friday last week. Anyway, not that it's great. It's not great, but we got 34 basis points, 36 basis points today. Have to take it, right? We'll take that. That is not too shabby. Still a long ways to go. Rates still up there. Mid to high sixes for FHA, VA, high sixes, low sevens for conventional. There are still some jumbo arms out there in the sixes. So it's not horrific, but it's not awesome. People are not loving it. They are not loving it. That is for sure. But understandably so. Rates have gone up quite a bit this year. And anyway, I'm waiting for the bounce. Now, here's what a lot of people were kind of coming at me with yesterday because I made a statement about this particular article. I've been telling you how Goldman Sachs is profiting wildly from their bond trading desk. Well, the only way you could profit from your bond trading desk when bonds are getting murdered is if you're doing the murdering or you're at least riding the coattails. Well, Goldman Sachs doesn't ride anybody's coattails. Everybody rides theirs. So they're actually in here, and there's collusion involved with this. There's no doubt about the fact that Goldman has a direct line to the Fed. They know what's going on. They know what's going to be done. They know what isn't going to be done. They're shorting bonds and making fortunes doing it. Shares jump after topping analyst expectation on strong bond trading results. That's 2 quarters in a row. They said the same thing. 2 quarters in a row, we beat analyst expectations because of our strong bond trading results, which means they've been market making this thing, and they're the ones who are responsible for the massacre that's been going on over here. They're doing, but they're doing it with the Fed saying, hey, we're willing to look the other way. Not our problem. We're not buying more bonds. Oh, are you sure you're not going to buy more bonds? We're sure we're not going to buy more bonds. Cool. See you later. And that's what they've done. They've just gone in and just crushed the bond market. So yes, it upsets me. Some of my free market friends are like, hey, I thought you were a free market. Doesn't mean I have to love every aspect of it. Just because I'm a proponent of a free market doesn't mean that I like it when people take advantage of it. And yes, there should be checks and balances. Look, all the Fed has to do is say something. Just say something. Hey, mortgage rates get too high, we'll have to step in. That's all I have to do. Just say that. and it'll call the dogs off. They'll be like, oh shit, we got to get out of this trade. And that's why I've been telling you, like, when rates drop, they're going to drop drastically. It'll be significant. It'll be fast because the pivot will be there, either with the Fed just talking or policy. One or the other, doesn't matter. They will have Goldman will have to exit their bond positions, and they'll have to do it quickly, and it will send bond prices soaring higher. And it'll just be day after day after day for probably 2 or 3 weeks, where we see rates drop, and they'll drop significantly. Now I don't know when that's going to happen, but that's how this all comes to an end. It's not going to be some slow grind higher. No, this is a massive position that's been built over a long period of time. To unwind that swiftly, you will see explosive upside. So that's the only good news about it. But when does that pivot come? Well, today there's just rumors of it. Mind you, the Fed didn't say anything today. They didn't come out and say, "Hey guys, we're here to like save the day." But everyone thinks that. Why? Because there's lots of pressure mounting. There's pressure mounting. Hey, not that the Fed would ease, but that they would just stop. Basically, do nothing. Please, could you do nothing, please? Could you just stop doing stuff? And that's what the expectation is. By the way, we're live on Facebook. We got that fixed, I guess. YouTube, Twitter, LinkedIn. Live on LinkedIn, guys. That's right, my friend. We live. Oh God, I love that. That's my favorite comment. Thank you so much for that. So you can do comments, you can do questions if you want to. Going to be a relatively quick video, but I do want to show you a couple things today. So here's like average rates. See, we're better than this, pretty much across the board. Definitely a little bit better here. Definitely better here by about 1/4%. But everything else relatively the same. These got jumbo arms. This is a conventional arm right here, by the way, not a jumbo arm. This is jumbo fixed. So yeah, that's where rates are relatively. This is a decent link to kind of track that if you want to. I'm also going to show HELOCs today. A lot of people asking about HELOCs. I'm going to show you kind of what a matrix looks like on that. We'll get to that in a second. But back to Goldman. So Goldman, they're going to have to, at some point, the Fed will either just stop tightening or they'll pivot and say, you know what, we may need to do some things over here. And that's going to be the turnaround. And it's going to be violent and it's going to be fast. It's going to cause stocks to go nuts. It's going to cause bonds to go nuts. And most likely, we're going to see that happen. We're going to see it happen in the markets before we hear the announcement. Now, there was rumors today. Does that mean maybe mid into next week, we're going to actually hear the Fed come out and say something? Well, the way we would know is if we get a bunch of more of these candles, right? If like the next day is like this, and then the next day is like this, and then the next day is like this, I'm going to start to say, guys, announcement's coming soon. Announcement is coming soon. You can tell because they're marching it up and they want to make sure that they buy those bonds before people know that it's coming. And so however many days they get in advance, we'll see it happen on the chart first. I'm like, whoa, what's going on? Bond investors are stepping in. No. It'll be Goldman getting out of their trade. That's what it'll be. And you'll also see kind of what we saw today, which was just a big, giant, green, bullish engulfing candle. This is the S&P 500 right here with lots of gaps and just wildness, super volatile. And this is the second gigantic green candle that we've seen. The other one was at the lows, which took us back up above the previous lows. That was huge. Then the next day we closed below them and then back above them. So, I mean, this is all over the place. I mean, just all over the place. Big green candles, though. And notice the direction we're now headed. Higher here from the bottom, higher. Let me get you a trend line. Let's track this. Let's track this trend line. That's pretty violent, right? That is a big upward trend line right there. Let's see how that does here. But bottom line is, if the pivot is coming, we're going to see this kind of march higher. And before we know that it's what's happening, we'll be able to look back and go, oh, that's why the market was getting bought like crazy. The market today was what I call an up only day, where it just ticks higher and higher and higher. It just won't go down. There's not normal pullbacks or anything. It's just higher. Those days typically happen on like Fed announcement days or Fed easing days, or days where like one of the companies that's driving the market, like Apple or Tesla, has a huge report or something really bullish happens, something that's so macro bullish that shorts are out. No one wants to sell, everyone's buying. So let's see how that plays out. But you're going to see that too. So we'll see. Goldman Sachs, screw you guys. I am a free market guy. I don't believe in the exploitation of the Fed or the people or markets for profits. Look, if you want to short bonds to hedge something, I get that, but taking advantage of the Fed is bullshit. You should be ashamed of yourselves. U.S. consumer soldiering on despite soaring inflation, recession risk, credit card giants say so. People are still spending. Remember when I was telling you that going into this thing, we had a record household wealth, all-time record household wealth. Well, that's one of the cushions that we have for this recession that we're in. It's a cushion that helps because people have cash on the side. They're not as concerned. They're not freaking out. They're not cutting everything yet. It's not to that point. Although remember, I told you in February to tighten the belt a little bit to try to, be smart about where money was going because this all was coming. And now we're further down the road. People are still pretty normaling on, which is amazing considering the fact that we literally have like nuclear threats on a daily basis. Here's an interesting one you should check out. This is one of those ones where the headline is misleading, but it's only misleading if you don't understand what it means, and most people don't. Bitcoin fails to rally. This is last week, I believe, or no, this was Tuesday. Bitcoin fails to rally with stocks as $940 million of Bitcoin is pulled from exchanges favored by institutions. When you hear that a whole bunch of Bitcoin was pulled from exchanges that's favored by institutions, it sounds bad. It sounds like institutions are exiting because it says, well, they're pulling it from this. No. Understand, you take your Bitcoin off of the exchange when you do not plan to sell it. If you're putting Bitcoin onto the exchange, that means that you're going to sell it, right? You take it off the exchange and put it into your wallet or your hardware wallet or your whatever, wherever you're going to store it when you have no plans to sell it. So quietly on Tuesday, $1 billion in Bitcoin was pulled from the exchange that's favored by institutions. Meanwhile, Bitcoin itself, we haven't looked at this in a while, have we? Broke that downtrend. I hadn't even seen that. Broke the downtrend. Wow, I'll be damn. And it's just holding, it's just pinging in this range right here. That is no longer valid. It's in this range. Very much looks like a bottom is forming here. And we have institutions pulling $1 billion off exchanges, not selling. All right. So pay attention to that. That is also potentially a signal regarding the Fed because this all started when the Fed started tightening. Bitcoin, Bitcoin was still down when that began, but the real crushing of the crypto market began with the tightening of the Fed. So the turnaround will be on the pivot. And everything's about that. It's all about the Fed. So that's Bitcoin. Home builder sentiment drops to half. This is obvious. If you're building homes, if you're flipping high-end homes, you've got a real situation on your hands. You got to really figure out how you're going to get around this. I mean, we've talked about the 2-1 buy down. People are talking about the 3-2-1 buy down. There's ways to help buyers get better deals, but man, got your work cut out for you. If you are selling expensive product in this market, good luck to you. So in other words, long story short, this doesn't mean much. Home builder sentiment means very, very little. Very, very little. But it always gets a headline because it's a lot of times negative. Home builder sentiment, you are selling the most expensive product. So, in a time like this, that's not going to work out well. This is an FYI. So the rules change for 2023. You go up to 22,500 in your 401k plan, 6,500 IRAs. So that's just an FYI. Let's see. We're going to have mortgage rates. Okay, let me show you HELOCs here, and then I'll wrap up. So a lot of people looking to get HELOCs or second mortgages right now. Let me just explain to you the difference between the two. The HELOC, okay, is going to be something that you plan to reuse. A good example, I have a buddy who flips cars. He has a HELOC. So he goes and he buys these cars at auctions or he buys them from private sellers, and then he flips them. He either fixes them up or does something to them and gets them to look cooler, takes better pictures of them, whatever, and then he flips and he sells them. And then when he sells them, he pays the HELOC off and keeps the difference, profit. So HELOCs are great if you want to reuse the line of credit. But remember, they're not amortized, so you're not for sure going to have it paid off by X date, and the payment's higher because it's a percentage of the balance than if you did a second mortgage. So we're going to look at HELOCs here first. For a HELOC, there's no such thing right now as a HELOC on an investment property. You can get a HELOC on your primary residence or a second home for a small hit to the rate there. But this is the rate matrix. This is how these things work. I was able to dig these up today, and I was talking to somebody about them yesterday, and it made me realize, you know what, I should probably show these. So prime rate 6.25 plus the margin that's on here. So 6.25 plus this is what the rate is. You can see it's very credit score driven on the left side, and then loan to value driven across the top. So whatever your loan to value is, you look at that, you go down to what your credit score is. Let's say you're at 740 and you're at 70% LTV. You add 2.8% to this. So you're at basically 9% on your HELOC. Okay. That's your start rate, and it is adjustable, but that just gives you an idea. So like the lowest HELOC rate right now is like 7.95%. That's if you're in that category, 7.95. This is just one bank, but they had the matrix, which was cool. Actually, I need to send it to somebody. I need to remember who that was. And then there's second mortgages. Okay, now second mortgages or second liens, a little bit different, where it's fixed. It's like a regular mortgage or car loan where you're, hey, this is going to be a 30-year loan, and the payment's going to be this every time until it's paid off. And that is what this second lien sheet is here. You can see here's the credit scores on this side, then loan to values up here, and these rates vary. There's nothing to add to these, but like the best rate there, 7.99, and you can get into the 13s, and that's before adjustments. So like if it's an investment property, you have to add 1.25 to that. Second home, you have to add 0.7 to that. If the loan amount's really low, you have to add some to it. So there's other adjustments on there, but these are the kind of things you want to screenshot this stuff, whatever, just gives you an idea. A lot of people are asking about these, and the rates, by the way, they are pretty much the exact same between the 25 or 30 year up here versus the 5 to 20 year. These are a little bit lower down here, but not much. It's really, really similar. So that just gives you an idea. That's where second loan rates are at. That is where, that is where the HELOC rates are at. And this is the important point. Thank you, Chad, for saying this, because I totally meant to say this earlier. He said they wouldn't have to save it if they didn't goof it up in the first place. Exactly. The Fed is going to get kudos. It's amazing. They set a fire, and then we're going to give them kudos for putting it out. It's just so ass backwards. It really, really is. And it's just so annoying to me. We let these guys just guns blazing all the time, screwing things up, and then they're going to come in and fix it, which I hope they do, frankly. And then we're going to give them credit for it. Credit for fixing something. I'm not going to give them credit, but we do need them to do something, because they've essentially made a mess that's so big that they're the only ones who can fix it. And right now, the only thing they need to do is stop doing stuff. Stop it. Just shut up. Go away. Stop. Just stop. That's really all that needs to be done. If they were to do that and just maybe say something here and there about how, you know what, we'll come in and rescue things if we need to. That's all the market needs to hear. Today, a rumor spread today. Can I show you this? Let's just look at the 5-minute chart on the S&P today. Let me show you what an up-only day looks like. This is on a rumor. There is nothing from the Fed, by the way, and the rumor could be true. It could be, okay? But let's see, where'd the day begin? Today is the 21st. Okay, day began down here. And look at that. Just, okay, pull back. Every opportunity, slight pullback, up higher, slight pullback, up higher, slight pullback, up higher. Just relentless movement higher. That's on a rumor. So imagine if the Fed had actually come out and said, you know what, we're considering all options. Don't even have to say anything about a pivot. Don't have to say anything about easing. Don't have to say anything about bond buying. Nothing. Just, we're considering everything now. Instead of this laser tunnel vision, we must raise rates until 2% inflation no matter what. Don't look at the situation. Let's just do it. That has been utterly stupid. And it's ridiculous that that's the situation that we're in. If they would just say a few things, it would really, really, really go a long way. So let's hope for the best. At this moment in time, 2-1 buy down is still the big thing in the marketplace for people who are looking to buy homes. Sellers are agreeable to this. It saves you a ton of money, especially the first year. Second year is nice savings as well. very good chance that we're going to have a refi boom next year. It's very, very, very good chance. It won't take a whole lot. It basically take Goldman getting out of their bond trade, which would just, and all that would take is the Fed just saying something, not even changing course on policy. But if the Fed decided to change course on policy, it could get violent. I mean, we could see rates go way lower, really fast. And while that isn't necessarily an ideal situation for all things considered, it wouldn't be worse than where we are. I mean, if rates just went to 3% overnight, yeah, that would mess some things up. There'd be a lot of EPOs. There'd be all kinds of weird refis going on. The market would get crazy. And that's a whole different kind of problem. So it's not that we necessarily want to go from one problem to the other, but it's needless to say, the people who are in charge, who are supposed to help things, are making things worse. That's not okay. I'm not cool with that. If you need help, if you have questions, here's one. Mantis. Pros and cons in getting a HELOC now to use for a down payment versus when you find a purchase opportunity. If you get a HELOC, here's the trick with the HELOC. What you do is you have to take the amount out up front. So let's say you get a $300,000 HELOC, you have to take the $300,000, but you can go ahead and just pay it off right away. So yeah, getting a HELOC is never like necessarily a bad thing. If you want to just, have it for a rainy day or use it for potential opportunities down the road, a lot of people get HELOCs for that reason. So what you do is you take the money, they give you the money up front, then you just go turn around and pay it off. And now you have a zero balance and you have a HELOC and you can pull the trigger on something any point in time. So yeah, totally recommend that actually. If you think you might need it. What you don't want to do is find a property and then go, okay, shit, how do I get the money for this? And then you're asking for a 45 or 60-day escrow or some weird stuff like that, or hey, it's contingent upon my refi closing. If you have the HELOC there and you can write the check, then that puts you in a really, really good spot. So yeah, if you're hunting for opportunities right now and you don't have cash ready to go ahead and get a HELOC, pay the HELOC off with the money you got from the HELOC. So it's just back to a zero balance. And then boom, you are ready and armed to attack the marketplace. Great question. Mantis is the man. All right, guys, I'm going to call it a day. May as well. I'm grown so tired of the Fed situation. The Goldman Sachs thing sent me off the edge, I'll admit it. I was a mess. The first time. And then the second time, the second quarter in a row, same thing. And no one says anything? Not a single member of Congress, not a single member of the Fed, not a single member of the government, the White House, nobody. They're celebrated. Oh, Goldman Sachs, look at the whole golf clap. No. Okay. Drives me crazy. You guys have a great day. I'll be here if you need me.